Hello traders, Greg here with a market update. Okay, so the market and traders have had a decent break from trading a geopolitical risk, but that is over. Geopolitical risk came back last night. So Iran had attacked a couple of oil tankers going through the Strait of Hormuz, and the US obviously has retaliated. They have hit some targets in Iran, and also what they've done is that they have revoked the sanctions that they lifted for Iran to sell oil. So basically they're saying that that would only apply to Iran for good behavior, and obviously at the moment they're judging that Iran is engaging in bad behavior. So look, the bottom line is that once again we're learning that this memorandum of understanding, the ceasefire, etc., is extremely fragile, and at any stage, look, this could always break down and break down a lot worse than what it is at the moment. So that is something that traders certainly can't dispel. So obviously the most important commodity is crude oil. Now crude oil had sold off almost back down to pre-war levels, a long way lower as traders pricing in all the good news. But obviously now seeing some bad news. We've seen oil spike up last night over 5%, so back above $70, pushing $72. One of the things that we've mentioned on numerous occasions is not to chase crude fresh short down to these sort of levels, and the bias is really on the other side, is actually being long crude, and again that bias to be long crude is certainly there with these tensions. So you've got a market that is certainly very, very short crude now. Crude oil, if those shorts obviously need to cover, we can certainly see a bigger spike in crude, and no doubt, look, the sort of levels in the short term that probably are realistic, back up towards maybe the $80 area. But in any case, yes, if crude oil moves, it does move other markets. So if we have a look at US bond yields, now they actually did trade down a little bit lower on the payrolls missed last week, but US 2 yields back straight up, back pushing up to very elevated levels, back to almost 4.2%. But 10-year yields back above 4.5%. They're at 4.55%. They are stubborn. Look, these yields, they do look like they want higher, and that is something that market really needs to watch carefully, because yields going higher certainly is very bearish for markets as a whole. Anyway, so if we also look at market pricing for Fed rate hikes, they cooled a little bit on the miss on the payrolls, but the market pricing now with the Fed fund futures has actually increased on the back of this, spike in crude and the geopolitical tensions again. The US dollar certainly, look, it's been following yields, and also when crude spikes, US dollar goes up. We certainly saw that overnight. So US dollar index is back above 101. It's around about 101.20. The highs that we've seen recently with the aggressive US dollar trend was around about that 101.80. So again, would not be selling USD. Being long USD is certainly the way forward. It is looking very good. Japanese must be super concerned. They don't need crude higher and dollar yen higher. They're getting both. And dollar yen is back above 162, so around 162.20. The new 40-year high is around that 162.80, and so no doubt that's the short-term target. We take that out, we're going to be going above 163. Yes, obviously intervention fears there are certainly live and they are realistic. That is the risk of being long. But yeah, look, Japan has got serious issues. Obviously, both crude and dollar yen continue higher. If we look at the commodity space with precious metals, struggling again. So we saw gold, which got a reprieve on the softer payrolls last week, traded up to 42 even highs, and that's been smoked overnight, $100, and we're actually now trading around 4,100 and just below. Again, I would not be buying dips there. Yields continue higher. Dollar continues higher. That is a massive sell for gold. So certainly, no doubt, we potentially go back down towards 4,000, breaking that. The recent lows around that 39.50. That's the big support. That breaks, maybe floodgates open. But yes, bias short on gold. Wouldn't be buying that either. Equity markets, yes, finally we just saw some negative prints there for S&P and NASDAQ, down around 1%, a bit more for NASDAQ. So they were lower obviously on some semiconductor names, but also obviously what's happening in the broader market with the geopolitical risk, crude higher, dollar higher, yields higher, that's weighing on equities as well, and potentially obviously that continues, that would continue to weigh on equities. So yes, look, that's current state of play in markets. Today we do have a RBNZ, Reserve Bank of New Zealand meeting. They have a cash rate that is very low at 2.25%. Inflation's back above 3%. Market is split, so exactly when they're going to get this rate hike, whether it's today or it's going to be maybe in a future meeting. So look, definitely we're going to see some volatility in the Kiwi on the back of this decision. I'm leaning more towards that they will hike, obviously with crude oil prices going higher and the fact that there's so much uncertainty with crude, and obviously that is going to continue to keep inflation elevated. So I think they will go today on that New Zealand RBNZ rate decision. The other important thing we have tonight is we've got the FOMC minutes from the first meeting, which Kevin Walsh chaired. He was hawkish. I'd imagine those minutes are going to be hawkish. So once again, that's good for yields in the USD. So look, I think I'd stick with those trends in the short term. Good luck with your trades. We'll check back with you shortly.